As a leader or key supporter of your nonprofit organization, the presentation you are about to view should be of great importance to you because it addresses one of the key issues facing most organizations like yours. What is the most pressing problem your organization needs to solve? Most organizations all agree that having a financial foundation to provide income for budgetary needs along with available funds for capital expansion is their biggest need. Have you ever asked yourself how large universities and nonprofit organizations are able to operate monthly with plenty of cash and how they're able to complete needed capital expansion with ease? How is that possible? How are they able to enjoy long-term financial security knowing that funds are available to meet their needs? The answer is they have large endowments. You may ask, I've heard that endowments are only for large institutions built up over long periods of time. How can my organization have an endowment? First, let's look at an endowment. What is it? Basically, an endowment is a large principal amount of funding created from financial gifts that have been given to an organization. The next question is, how do you possibly build a large endowment when you don't have 50 or 100 years of history funding it? That question is at the center of every organization's need for a financial foundation. If we could show you how to create a large endowment, perhaps one of $50 million in a short period of time, would that be something you'd be interested in seeing? Well, let's just say you answered yes to that question. Our idea is not a new one since the concept has been used by business corporations for years. We feel it's now time to bridge the gap between the business world and the nonprofit world to help the nonprofits build a strong financial foundation for the future. There are a few things we'll be looking at to get you started. 25 donors or supporters, a lead donor, and the use of an instrument called an irrevocable trust. We'll also look at a bank and insurance company ready and willing to partner with your nonprofit organization. As a leader in your organization, you'll want to pay close attention to the role of the lead donor, for without this person or persons, the program will not be able to function. Let's start with your donors, who are the basis for creating a successful endowment. Your donors will be 25 of your best supporters, aged 45 to 75. Let's examine an interested person and discover how they can benefit your charitable organization. For example, consider Mr. Smith, age 50, married with 2 grown children, earning $100,000 a year. Mr. Smith owns $1 million in life insurance. According to the insurance industry's rule of thumb, a person may own total life insurance of up to 30 times their annual income. So, Mr. Smith has the ability to own a total of $3 million of life insurance. That's $2 million more than he currently owns. What could he do with the ability to own that extra $2 million of life insurance? He could acquire the additional life insurance, and when the policy pays out, your organization will receive $2 million from the trust. Sounds interesting, but who pays the insurance premium on the new policy? Excellent question. That's where an important person gets involved who is called the lead donor. This person is vital in establishing the $50 million endowment for your nonprofit organization. Your lead donor has a passion for your organization, has a desire to help you establish your endowment, and has assets in excess of $10 million. The lead donor's function is to pledge some of his or her assets as temporary collateral for a bank loan, which will pay the premiums for all 25 donors. Pledging assets as collateral is similar to what many of us do when we take out a home equity loan. When we acquire a home equity loan, we use the equity in our home as collateral. The home equity loan creates a lien against the borrower's home until the loan is repaid. The lead donor may consider many different kinds of assets such as commercial property, farm or ranch land, or an investment portfolio. So the cost of the donor is zero. You may ask, how is that possible? Remember, our Mr. Smith no longer owns the $2 million policy since it is designated for the benefit of his favorite organization. The partnering bank is paying the premium. The only item Mr. Smith needs to consider in this example is that the additional insurance amount of $2 million is no longer available to his family. He has made it available only to his favorite charitable organization. However, if Mr. Smith's income increases, he would again have the ability to apply for additional insurance for the benefit of his family if he chooses to do so. Now that you understand the role of the donor and the role of the lead donor, let's review what we've learned and take a closer look at how the entire program works. Identify your lead donor or leaders, those who would be willing to pledge a portion of their assets to a partnering bank for a loan made to pay for the initial premiums into an irrevocable life insurance trust. With the loan money, the trust will pay the insurance premiums on behalf of all 25 donors. The cost to the donor is nothing. As cash values within the donor's policies grow, several things happen. Cash values in the insurance held by the trust begin to replace the collateral pledged by the lead donor. As donors pass away, the insurance proceeds are used to pay any remaining loan at the partnering bank, and the net proceeds flow to the nonprofit organization, building an endowment fund. There it is. Your organization is on its way to building a $50 million fully funded endowment and becoming as stable financially as the largest established universities and nonprofits out there. Your organization may wish to consider an endowment on a smaller scale or one that is significantly larger. With the glaring need to establish a sound financial foundation for the nonprofit organization, why wouldn't anyone proceed to get this started now? Contact us now to discuss how we can build an endowment for your organization.